My name is John, and I'm here today to talk about our banking system and hopefully explain to you how it's going to be a lot better than what it is right now. And now keep in mind, this idea that I have is very radical, but most ideas that change the world started out as radical ideas anyways. And I'm going to keep it incredibly simple so that anyone can understand it. First, though, I need to talk about how our banking system started. I will say, when it comes to managing our currency, we actually tried a few different things in the first few decades after forming our nation, but I'm not going to get into a whole lot of detail there with those. They're really not needed for this topic. Now, our currency was once tied to the price of gold. This was actually called the gold standard. Now, there are a lot of people that think we need to go back to the gold standard. Now, doing that would cause a lot more issues, and I really don't want to go into that in this video. I might consider talking about those there in another video, because that's all going to be a few minutes right there. Now, with the gold standard, the value of our currency was actually tied to the value of gold. There was no Federal Reserve, at least how we know it today. There were also really no big banks either, and there was no banking or lending laws. There were simply people who had wealth and people who didn't. Now, those who had it were born into it or amassed it when we were part of Great Britain. Now, these people usually loaned out money to other individuals. Now, keep in mind, there were no lending laws at all back then. So kind of think about how loan sharks operate today. That's pretty much what it was like back in the day. When you borrowed money from somebody and you couldn't repay them, they had no way to hurt your credit or anything like that. So they would usually take it out physically, or they would come and pretty much steal everything that you owned, resell it in order to recoup their investment. Back then, the government was beyond small. They did not interfere into any type of private business whatsoever, which quite frankly is a libertarian's paradise. Eventually, lending laws were passed, and eventually private banks formed. Now, these were created by people who had already had wealth and they loaned that wealth out, allowing others to potentially create their own wealth, and at the same time making money for the person who loaned them the money to begin with. Now, this type of lending was necessary for the economy to grow and thrive. If you look at this visual representation I have right here with this little animation, you will see that money went directly from those that had it into the banks, and then to those that did not have it, who then paid it back with interest. Also, back then, the bank was a great place to store one's extra cash because it was thought to be safer than with the money being under the mattress. Obviously, after the last Great Depression, we all kind of realized that wasn't necessarily true, at least back then. Now, eventually, this changed, and the Federal Reserve was created. It was actually created in 1913, and it was actually designed to stabilize and regulate the economy because, quite frankly, we had a huge amount of recessions and depressions back then. Something most people don't seem to understand was that during all of the 1800s, America went through all kinds of economic booms and busts. And then we actually left the gold standard in 1971 when Nixon abolished it. That's when the Federal Reserve gained full control over the value of a dollar. Many people think this is the reason our economy didn't grow so much after that as it did before that. Now, personally, I don't really think that is 100% true, but I will tell you the reasons why they did it and the promises they made all turned out to be phony. Now, the Federal Reserve completely changed the way banks worked. They now had an almost unlimited supply of money to borrow from. The banks started borrowing straight from the Fed. The Fed controlled the interest rate, which in a way helped control the economy. When the economy was doing really well, the Fed will raise the rate, thus slowing the expansion of the economy. When the economy does really bad, the Fed lowers the rate, which in theory makes the economy do better because it decreases the cost of lending money. Of course, this seems like a great idea, and it was designed to keep the economy in check and to stop depressions and recessions. Obviously, as you can imagine, it didn't quite work out that way. Now I did create another animation here to kind of explain how everything changed. As you can see, money goes from the Fed to the banks to the people, and then the profit goes back to the bank, who generally just turns around, repays the government, and keeps what's left over. Now the bank is, for the most part, acting like a middleman and collecting hundreds of billions of dollars in profits. All this does is siphon money from people's pockets in the form of high interest rates and fees and into the banks and investors. Before the Federal Reserve, private banks were needed. After the Federal Reserve, they really aren't needed anymore, and they should have been disbanded. Now, the Federal Reserve can basically do what private banks used to do. With this next slide you see here, it's another animation I made here. You can see what it would look like without private banks. Now, as you can see, businesses would borrow directly from the Federal Reserve. They would then control, the Federal Reserve would then control the lending with their interest rates, just like they do now. The rates would be lower than what people are currently paying because they're going directly to the Fed. And the money that the Fed would make would go directly to help the government there pay for all the services that the government provides. Of course, this would also leave more money in people's pockets for them to spend, because quite frankly, when businesses and people are paying less in interest, that gives them more money to buy other things. Now, we don't have to outlaw banking completely, just for-profit savings and loan type banking. Our options really could be the Federal Reserve, credit unions, which are nonprofit, or the post office, which can act like a bank when it comes to savings and checking accounts. Instead of going to the bank to deposit money, you just go to the post office to deposit money. Now, we really don't need too many more options than that if we're already getting the absolute lowest interest rates possible, and with the inventions of ATMs, we don't even need bank branches in every corner anymore. Now, in conclusion, banks are no longer needed to help the economy. They have become a drain on it, in fact. They do not create anything or provide a skilled service that benefits from competition. That means that we need to elect Bernie Sanders as president, because quite frankly, he's the only candidate that would even consider this concept, because he is not on anyone's payroll. And obviously, the only way you're going to make a change like that is to get candidates who are not on the bank's payroll. So please vote for him. And again, my name is John, and I do hope you enjoy the rest of your day.